What's going on, traders? Brandon Smith here again. Just wanted to bring you a little screen tips that I have put together that I use on a daily basis to narrow down the huge list of stocks that there is to pick from. So really, you're just shopping, and with just six filters, I can narrow down a list of 7,719 stocks down to something of a couple dozen, maybe 50. We'll see. We'll see here in a second. I'm kind of doing a live demonstration on YouTube. If you're listening on the podcast, but yeah, I'll walk through it. I'll tell y'all what I use on a weekly basis, almost on a daily basis, and why I use it. Some of the stuff I'll kind of talk about each one, break it down. But yeah, let's get started. So the first one that I use that I kind of think is really important is net profit margin. I'm gonna set it to at least 15%, over 15%, and that's just because I want the company to make enough money to have extra funds to grow. This isn't to just get by. There's a lot of big companies that make 2, 3, 4% just because they have so much overhead that it eats at their profit, their bottom line. I want a company that's either big or even maybe a little smaller that makes more, on the bottom line so that they can then use that money to grow faster. So yeah, first one, net profit margin. Another one that I really like is the average volume. So see, we already went from 7,000 to 800 stocks. Hello, pot ad. Go away. This is a free site, by the way, finviz.com. That's why you're going to see ads popping up. It's either pay a couple $100 a year or deal with ads. And right now I'm just going to deal with ads. I'll throw that 200 in the market. So the next one is average volume. We want this over 200K just because we want the stock to move. Stocks that are trading, a couple hundred shares, a couple thousand shares a day, you're not going to get price movement. And that's kind of what we need. We need it to have something underneath it. And also, even at this or even more than this, but below this, you can get a lot of market manipulation and money coming through and, blowing up your trades. So second filter, we're down now to 485 stocks. Another one, well, I'll save that one for later. Here's a good one. We're going to look at the long-term debt to equity. So I want that under 1. So if we're looking at that, if you don't understand what that is, just think of it this way. If we compare all of their long-term debt to all of their equity that they have within the stock and the company, what is that ratio? What's that relationship look like? Do they have way more long-term debt than they do equity? If they do, that number would be over 1. So by putting this number under 1, we're only looking at companies that have a bigger sharehold of equity in relation to their long-term debt. And I look at long-term debt because that's what can drag down a company. So always want that under 1. And realistically, pretty much all of the rest of these filters, they should all be subject to the average of the industry that the stock that you're looking at is in. So yeah, like I might be trying to buy a tech stock, but all the tech stocks on average have a 1.5 long-term debt to equity. If I put this filter in, I'm gonna rule out some of the good ones that are of the group. So understand, always relate this back to what the sector average is for whatever stock you're looking at, and this kind of goes across the board. But these are just benchmarks. These are just good. If it's doing this, it's obviously good. This is a good baseline. But like Apple has more than has a higher than 1 long-term debt to equity ratio, but I don't not like Apple. Moving on to the next one. This kind of gets killed with the quick ratio, so I'll actually put this here. But if we put the quick ratio to over 1, now we're looking at their assets to liabilities, and now we're seeing that their assets are bigger than their liabilities. I'll just go ahead and put that there too. We want this, and the quick ratio is best. We want this to show minus their inventory, how much is their stuff worth? It's cool if they have $50 million. If they have 50 million $1 shirts, they have $50 million worth of shirts, right? On the book, it'd be 50 million. If they say Bob's Pickles on the shirts, they're not worth $50 million because who's going to buy a shirt that says Bob's Pickles? It's $50 million of a very hard to sell inventory. So that's why we want to look at the quick ratio. Hold on one second. I'm gonna get some water. So just by putting these 5 here, now we're from 7,700 and something, I think 19 stocks down to 181 stocks. So with just that alone, we kind of just, quickly went through without ever looking at a single stock, without ever looking at a single one. Okay, and the last one that I'm going to add right now, and this is what's going to be the knife in the heart, so to speak. The price to sales, if we're looking at the current price and we're dividing that by the amount of sales per share, both on a per share basis, what's that relationship look like? This kind of shows how inflated it is relative to their sales. And again, this is another one that's highly needs to be measured in comparison to whatever sector you're looking to invest in, as just the sector average. But right there, putting that under 2 puts us down to 18 stocks. So we went from 7,000, almost 8,000 stocks down to 18 in a matter of, I don't know, probably 5 or 10 minutes, whatever this is, with just these 5 or 6 filters on this free site. And then this becomes very easy to kind of go through and kind of see what is cheap. And you'll notice like certain industry groups will show up. You start to see oil and gas. You start to see some marine shipping, credit services. All of this, it ends up showing you where the underpriced markets kind of are, and then you can use that in your investing strategy, in your trading strategy. And there's other things too that where you can angle whatever filters you want to try and match whatever goal you want. If you're trying to find hype, you can find hype. If you're trying to find, slow growth, you can do that. Dividends, you can do that. But yeah, that's all I really wanted to hop on and talk about today. Just wanted to give you these quick tips, and I hope you find this useful. The website here was FinViz. If you're trying to find me on Spotify, check out The Pivot. I try and bring you